Hello, everyone, and welcome to another Future Hospitality Summit podcast and video recording. I'm here today with the Knight Frank Middle East Africa team. I'm with Osama Al-Qadiri, Daniel Pugh, and James Wren. I'm going to let the guys introduce themselves and just explain a little bit about the different roles that they play in the firm. So welcome, firstly, and over to you, Osama, first of all, just lead off and let us know the type of work that you're doing for Knight Frank.
Thank you very much, Matt, and thank you for having us today. So I think we'll start with the introductions. I'll let Dan introduce himself first, and then we'll take it from there.
Okay. Thanks, Osama. Thank you, Matt. Very pleased to be here today. My name is Daniel. I lead the valuation, hospitality and leisure valuation practice out of Dubai. I cover the entire region of Middle East and North Africa, and we primarily do valuation work, which has to be RICS accredited, IVS accredited, that's the International Valuation Standards, and Takim accredited out of Saudi Arabia. So all the team here are all sort of accredited and qualified people to do formal valuations for banks, institutions, corporates, financial reporting, loan security work, that kind of thing.
My name is James Wren. I'm head of hotel and leisure capital markets for Knight Frank for the Middle East and Africa. I recently joined the team with Dan and Osama, so new beginnings for me. My focus is on hotel and leisure transactions right across the region. So typically that's sale mandates, working on behalf of owners looking to dispose of assets, working on acquisitions on behalf of buyers, and also supporting in terms of debt and equity raising. So an exciting role, lots of transactional activity happening in the markets over the last number of years. So excited to join the team and be here with you today, Matt.
Thank you, James. And Osama, finally.
Thank you both. And last, Osama Al-Qadiri, I look after the advisory service line across the MENA region. So advisory is all development-related operator search and selection, and on the asset management side and pre-opening services. So we have the dream team, the hospitality dream team from Knight Frank.
Well, that was going to be my next bit. That obviously the first part of this discussion we'll talk about how you guys work together and deliver for customers, and then we'll move into a little bit of a discussion of your thoughts and assessment of the markets. So first off, then obviously you have the dream team. How do you work as a group? How do you coordinate between each other to provide value to the clients from sale to exit?
I'll start here with just talking generally about Knight Frank MENA and the number of service lines we have across the MENA business, which is, I think we're talking about even 25 different service lines at the moment, covering all types of advisory and sort of real estate services. So we have a huge range of expertise and experts in the company, and we all sort of work together. So we've definitely got that sort of one-stop shop solution where a client can come to us and get the whole thing together. But in terms of the hospitality piece, I think Osama's the best person to take over next, because he's going to be able to, he's at the start, the development process, and he links in very closely at the start. So
thank you, Dan. So as Dan mentioned, we have plenty of service lines that are here for our customers and partners. And essentially what we do also have is plenty of offices. So if we put things into wider context, we have more than 600 offices. If we focus on the Middle East and Africa region, we have 7 offices in the Middle East and about 15 in Africa, covering East, South Africa, and the wider market, generally speaking. And we do rely as a sort of team on our local resources as much as possible. Now, if you ask me of what's the benefit of having the 3 of us, obviously the hotel asset class and tourism and leisure, generally speaking, is very specialized and sophisticated, as the owners are becoming more and more specialized and picky as well with regards to their projects. So we do provide with that sort of deep expertise in each and every individual field to the benefit of our owners. Now, the way we work with each other, if we want to look at the full development cycle, as Dan has mentioned, obviously there are different ways to look into a cycle. Capital markets and valuation could potentially support in a sort of land acquisition context. But let's imagine you're an owner and you own a land or you're about to get one and you want to start with a sort of tourism focused project. So the advisory team usually comes first into trying to define that project, understanding what the opportunities are, and have the right positioning, sizing, asset mix composition to fully capture that opportunity. And we can also bring in the operator, negotiate on behalf of the owners, and then move it on to other departments like the project and development services department that Dan had mentioned. And once we're closer to completion, we can support with, I'd say, the pre-opening and the asset management services that we provide. Now, valuation and capital market can intervene in different stages of this wider cycle. And I'll let each one of my colleagues comment on his part.
Yeah, I think the valuation is the next piece to talk about. And as Osama said, it can come in at the development stage. So when Osama has done his feasibility study and a client knows what they're building and has had it costed, we would then likely do what we would call a development valuation, which is in the industry, it's regarded as what we call the residual land value. So we calculate the value on completion and deduct the development costs, and whatever is remaining is effectively that project value. So a lot of banks require that at this stage while it's being built or just before it starts being built. And of course, we can do valuations all the way through the life cycle of the asset as well. And conversely, right at the end as well, when it's being sold, a lot of owners are going to want a valuation to verify the price that's being agreed or to validate it. And that sort of brings us on to James and his piece, really, about selling.
So similar to Dan, capital markets team can get involved in the development stage. I suppose when now Osama's team will finish their work, there's a concept in place, a business plan in place. Often you'd have the promoter or the owner of the site, or those who are promoting the project. They might be looking for partners, so we can help support on equity raising, or if they need support with dealing with different fundraising, the debt advisory side, we can support on that as well, so the construction can start. I suppose we're most well known in our practice is at the latter stages, after operations have begun, when a property is stabilized. Typically, we can support the owners in terms of exit strategy. So we are seeing a rise of a number of exits, especially in the Dubai market over the last number of years, with assets that are stabilized. Maybe owners are looking to exit within a strong market, and we're supporting a lot of owners in that stage. So we'll bring the property to the market. We will put together, full information on the property. We'll do a broker opinion of the value. We'll run a sales process. We'll invite bids and offers, and we'll support the owner from full through the due diligence stage and closing the property and the sale alongside the solicitor. So we're very much have the ability to support at that development stage to get the project materialized from a financial point of view, but also from an exit point of view at the very end for an owner.
So I suppose the message is that you've got these obviously three parts, three areas of the business that are all interdependent, and you're trying to get that across. I guess the question is, is that actually a unique position to other firms in the market, and how would you sort of explain that sort of interdependency to a client in different parts of the process?
Well, it's a lot about this one-stop shop solution. Clients are able to come to us with a varied RFP for multiple different services. It could genuinely be an RFP that has valuation, feasibility, property management, project management as well of the actual construction. And we have that ability to be able to offer all of those different services to a client and be able to be joined up. A lot of other of our competitors, they don't have the range or myriad of service lines that we have. They would often have to contract out to get those in to be able to serve an RFP. And that sometimes, in this market, is less attractive for a client. So we are certainly able to sort of come in and serve the whole thing. And of course, we're all connected. We're all in one of three different offices. We're all talking. So it's a very joined up approach that we have.
Yeah, I think I'd add to that. I think where we're unique is that we have 3 standalone departments for each. So we'll come together as a service line practice, but individually we're specialists in our own area. And I think if you look at some of our competitors, a lot of firms might be more generalist. They might have a hospitality team, part of a wider consulting team. We have Osama, standalone hospitality team, standalone hotel valuation, standalone hotel capital markets. And we are unique in the market having those standalone specialists where we're full-time working exclusively on hotel and leisure projects. And we feel that no other firm in the region offers that. So that's where we feel we have that competitive edge.
I think the point is made and it's clear. So when a hotel is now operational, how then do you continue to collaborate to gain maximum performance for a client?
When a hotel is operational, or I'd say we usually would intervene slightly before the hotel is operational. So we can start with the pre-opening phase, essentially, where our team has a sort of consolidated experience of over 70 pre-openings in the Middle East and Africa region here. And what we try to do is support owners to hire the right staff, have the right commercial strategy, and make sure that the budget is under control and not completely going through the roof. Once the hotel opens, there are 2 different ways where we support our owners. There is a sort of high-level version that we call operational review or turnaround strategy, where we look at the revenues, the costs, and we have these interviews with the team and try to identify ways to enhance revenue and to reduce costs. And this usually comes into the form of a deliverable with some recommendations. And if the owner wants us to, supervise the implementation and sort of be accountable for it, then it becomes asset management where we follow during that entire period. So that's usually the way we intervene in income producing assets. The last one is sometimes some owners may be a bit dissatisfied with their operators, and we can put together a sort of competitive context where we support as well on the sort of operational strategy as well further down. Maybe Dan has more to say about that.
Yeah, that sort of process, whenever there's a change in operating performance, especially if there's a bank involved, and there's either it's up or down. If it's up and it's an improvement, they probably want to capitalize with an up-to-date valuation. And if it's down, the bank might be getting concerned and will be wanting an updated valuation. So whenever there's change in the market or in the actual hotel itself, there's going to be sort of valuation work all the way through. And I would be, for example, if there is major changes in the F&B strategy of the hotel, which, there's a lot of hotels now that are moving towards leased restaurants. That's a big trend in the market. So you do that and you start to change things operationally in the hotel. And that requires work. And of course, if it's a regular valuation client that has not really ever needed any sort of feasibility work from Osama's team, if there's genuine sort of issues there with operations, it may be more something that Osama and his asset management team would be more appropriate to go in and have a look at and, a more in-depth analysis. And likewise, of course, if there are clients that are genuinely thinking about selling, I'm going to be able to bring James in to go and talk to them about their strategy of divestment or acquisition. James, have you got anything more to add on?
I feel that at the moment, owners are really open to the conversation about potential sales if the prices are right. So I think one of the major tasks we have is keeping our client list up to date on what transactions are happening in the market, what prices are properties trading for, what are the movements in terms of yields, who's interested in properties in those areas, and keeping owners up to date. Maybe they're not looking to sell, maybe they're looking to acquire assets, but providing them with up-to-date information and being, I suppose, a trusted advisor to them throughout the process. So I think maybe Dan's part of his business is a lot more, maybe say formal, where they're doing formal valuation work for the bank. And I think on an agency view, it's a bit more high level, a bit more broker opinion of values, and keeping them updated in a bit more of a, say, friendly manner what's happening in the markets and be their trusted advisor.
We at the Future Hospitality Summit feel that we're nicely positioned in the world at the moment. I think the sort of view was always that the sort of Western markets were the strongest, and we've seen this sort of slow shift, actually quite a speedy shift over to sort of the Middle East market and an interest in it. What's your view of the Middle East hospitality landscape now in comparison to the global markets? And what sort of challenges or opportunities does that throw up that you're sort of advising your clients with?
I'll start this part, but I think this is generally the Middle East market has always been a more fluctuating, a little bit more volatile. Up to 2019, we were pretty much all markets across the Middle East were declining from a performance perspective. There were very few transactions. You could even be arguing that it was still, not even a mature market at that point in 2019. But now the last 5 years, 6 years have seen huge change. I think the UAE is almost a core market now in terms of hospitality and hospitality investment. Saudi is rapidly changing. But generally, the markets in the Middle East were declining up to 2019. Between 16 and 19, there was a lot of supply increase and the performance was decreasing. Generally, the markets here were arguably becoming saturated, and also the ADRs were very low. Like there was a very highly reputed upper luxury brand in a hotel in this region that was famous for achieving the lowest ADR of its kind in the world. And that was typical of, some of the locations in the Middle East. But it's not the same anymore. It's massively changed. And, we're seeing now a huge wave of supply growth in, ultra luxury hotels that the kingdom is building with the PIF giga projects. We've got very solid performance. Post-COVID, things went crazy. 2022 was a peak year for the luxury market here. And, everybody was saying in Europe post-COVID that it would take up to 2024 to recover fully to 2019 levels. Dubai and the Middle East had exceeded 2019 levels by the middle of 2021. It had a great story of, the COVID situation. It was able to capitalize on the social distancing and its sort of, what's the vaccination program. And it's just carried on since then. Yes, it's softened a little bit in 2023, but now, mid-year 25, we're seeing another 12% growth in Dubai. So we've just completely eclipsed those days and everything is now looking extremely strong. But some of those luxury markets globally are still sort of ahead of Dubai in the Middle East, particularly sort of the likes of the Maldives. That's a very classical luxury hotel market that still has very high rates. But yeah, it's generally been a very positive story for the Middle East compared to those global markets.
How's that sort of impacted the whole view of the Middle East with international capital, especially then? I think a lot of it view is there was a lot of outward looking money from the Middle East, but now how does the Middle East shape up as an investment market?
I think on the investment side, Dubai in particular, Dubai is a bit of an anomaly, I would say, for the region. It's truly globalized capital has entered into the market, especially over the last number of years. We've seen the rise of on the private side, high net worth individuals coming into the market, a lot of them with hospitality exposure. They're looking to purchase assets, they're putting offers down on assets, and they're actually acquiring assets as well. So they have a competency in their home market. We've also seen it on the development side, the rise of international developers from all over east and west, purchasing plots for hospitality development, for branded residential development. And I think that's a huge, we've seen a huge increase in that global activity in Dubai. And I would say Ras Al Khaimah as well. I think Ras Al Khaimah is a really globalized market in terms of, if you look at the development that's taking place, in particular in Marjan Island, where there's freehold plots available, the internationalization of the developers there that are constructing hospitality projects is quite phenomenal. So I would echo Dan's comments in terms of the globalization of the markets. And then when we step out maybe a bit further across the region and we see growth markets, there is quite a lot of interest in Saudi Arabia. The investment story there is very strong in terms of the opportunities for hotels, the demand, the population demand, the consumer demand, the visitation from across the region and globally. And there is international capital looking to go into Saudi. However, it has obviously a journey that is going on. And I think there's going to be a lot of international investment over time into Saudi. And it's going to require it to meet its vision. And if you look at the targets that the government have, they have targets around FDI and increasing that on the road to 2030. And I think in hospitality, there's very clear targets as well. And having international capital would be required to support, I suppose, the growth in the hospitality market. And there's plenty of capital there that's looking to capitalize on that.
Any other comments from Sam or Daniel before we go on to my favourite subject, which is Africa? Because we've forgotten to mention Africa in this little old continent. Tell us what's happening there, the key trends and such like that you're seeing within the African hospitality market. So it was interesting. I was talking to one of the big operators the other day, and they even sort of mentioned that they felt that Africa was really the next 5 years. They were really excited about it. So what are you sort of seeing, and how are your teams working there?
So in terms of development for Africa, we are, I'd say, extremely optimistic and bullish about this market, generally speaking, mainly because of the fundamentals and the incredible landscape that we have and the variety of purposes of visit. The transportation market is increasingly, I'd say, direct. So we had a lot of transportation, airline transportation, relying on some regional hubs. And there are more and more direct lines with the source markets currently, which increases the sort of accessibility and attractivity of, I'd say, these countries as tourism destinations. And then if we look at how the hospitality markets are capturing that, there is a lot of development happening around 27,000 keys in Egypt, 7,000 in Nigeria, 7,000 in Morocco. The numbers are, I'd say, very significant, and the improvement is there. With events such as the World Cup being hosted in 2030 between Morocco, Spain, and Portugal, there is even more to look into. The Egypt, I'd say, Ministry of Tourism has come up with a national tourism strategy to host 30 million visitors in a couple of years now, and they've unlocked a fund to help owners support in having that lodging capacity. There are plenty of initiatives to, I'd say, enhance the infrastructure that is coming up, and there are the mega and giga projects that are currently taking place in northern and sub-Saharan Africa as well. So overall, it's a land of opportunities, and there are a lot of diversity. So we still have to pick the right market with the right dynamics, and the capital structure also looks into more specialized people that have some experience and local partners that could serve as a sort of guarantee to have that development solved. Now, to link it with the previous, I'd say, discussion taking place, hotel owners are usually more international. So you have many owners that actually have hotels across a variety of geographies, which is quite specific to the hospitality asset class, or at least to a certain extent, a lot more than office, retail, and the other asset classes. So there is plenty of development activity that we are following up on closely in the region.
Follow up on what Simon said there. I mean, the brands, I mean, it's just like the perfect sort of tourism location in terms of its fundamentals, with the big experiential kind of themes that Africa has. You know, you've got so much beach, there's the jungle, there's safari, there's islands. It really does have everything. And I think a lot of the big operators, especially the more higher end ones, the luxury operators, are genuinely trying to tie a lot of those experiential together. So they'll end up having a few nights of stay in a safari lodge, and then they'll get, they'll go down to the Victoria Falls and have another couple of nights there, and then they'll move down to South Africa to the Stellenbosch wine areas of South Africa. There's so many different sort of demand generators and big tourist attractions in Africa. The operators have got a huge opportunity to really sort of merge those together and provide, big package stays to a lot of their high spending customers coming to Africa.
How does this whole idea of secondary cities play in the region? And there's a lot of talk of coastal developments as well, and the move back to sort of resorts. I think this whole idea of opening up sort of coastal destinations. How is that sort of reshaping the whole of the region, and how much of a big part is that, or is it still within Africa, for instance, primarily business that's driving things? Or you talk about mixed use there of experience, but what do you see the sort of major trends there in the region?
So in terms of, I'd say, secondary cities, so if we put it again back in the context of Africa, there is almost as much, I'd say, revenue generated in tourism between North Africa and South Africa. And by North and South, I'm talking Sub-Saharan and the northern countries. So the amount is quite significant. If we are looking at the way these has been increasing, I'd say pace is slightly, more advanced in Northern Africa, mainly due to some mega and giga projects, but it isn't always the case. Now, these mega and giga projects, to come back to your questions, do come through coastline developments. So there are plenty coming up at the moment, for instance, in Egypt, whether it's Sharm el-Sheikh or Ras al-Hikma, that are sovereign wealth fund backed, essentially. A lot of developments happening across a variety of geographies. In Eastern Africa, you do have as well countries like Ethiopia or Kenya that are actually consolidating their position either as a regional diplomatic hub or a regional business hub, which do drive even further government travel or corporate travel. But there is still that sort of unique feature which comes into the coastal development, or the unique development-focused tourism development that are currently happening at the moment. So if we go back now to the sort of Middle East region, and specifically GCC countries, there is a lot happening in less established I'd say destinations, whether it's Saudi Arabia that is hosting the FIFA World Cup and requires the development of, I'd say, sufficient infrastructure to host all of those visitors for the cities which have been selected, including some like Abha, which are secondary at the moment and that are backed by this sort of infrastructure government vision. And there is a lot of, I'd say, support that is being provided, incentives that are being provided either via tax cuts or I'd say rent-free periods if we are to lease land, and the sort of wider machine that is there to support investors in having the right partners, mitigating the risk by having joint venture partners, and a lot of these initiatives that are being put in place towards development. So to name a few, Neom, Red Sea, Amala, those are the mega giga projects that are coastal. You have the secondary cities that we have mentioned, and they're not secondary as such, but as James had mentioned, you do have Ras Al Khaimah, which is a coastal development that is continually growing and stabilizing with a diversified offering now that you have the wind casinos in place. And as land has become more expensive for, I'd say, first-time comers and freehold land, beachfront properties are more difficult to get in some of these destinations. We are seeing development actually being redirected towards those cities. When coupled with branded residences, it helps fund that development and make it even more attractive. So the I'd say affordability of land, government infrastructure coming into place, and the wider set of incentives and regulation shifts that are happening are the ones that are supporting the secondary and coastal developments across both geographies, generally speaking.
Yeah, Tama's point there about the sort of the different markets as secondary. I mean, the lack of beach in Dubai is just well known. It's very difficult to get prime beachfront land for hospitality now in Dubai. It has been for many years. And, you know, if anything, it's not going to go for a hotel use. It's going to be sort of prime residential. So, you know, moving into these different sort of markets, into Ras Al Khaimah and down along the sort of the beachfront, of course, you know, I think the next wave of development will be between Dubai and Abu Dhabi. It's almost going to probably in 30 years, they'll be connected, the cities. Of course, we've got Palm Jebel Ali now. This is a huge, you know, triple the size of Palm Jumeirah, which has created some more prime beachfront land. We've got Dubai Islands, which is up near Dira, which is Nakheel and Dubai Holdings' new sort of reclaimed island, which is going to have another load of sort of prime beachfront. But yeah, moving up the coast, it's Ras Al Khaimah. So there's genuinely a sort of fight for sort of more prime beachfront land, because that's where hotels achieve their prime ADRs, is through sort of offering a beach access, which is very important to the industry.
One thing we've also seen, I guess, which was the Swift effect, the Taylor Swift concert, and how these big and then you mentioned the World Cup a couple of times and so on. How important do you think it is now for destinations to drive their strategy through big events and propping up their annual sort of destination attraction?
Abu Dhabi is just doing that, is on fire doing that at the moment. You know, the Coldplay concert and their general demand generators they have, SeaWorld and all the different offers they have. It's arguably a better offer than what Dubai has. And I've also done some work a lot in indoor arenas in the region, in Riyadh and here in Dubai. And of course, there is a big push to build more indoor arenas to be able to create almost like a network of locations for a big artist to come to. So when they come to the Middle East, they don't just want to stop at one place and just do Dubai. They want to stop off and do 3 or 4 different shows and then move across to Asia Pac or wherever they're going next. So, you know, genuinely Abu Dhabi has got a better offer there, but that whole leisure segment is really sort of taking off as well.
Yeah, no, I think I was just in Abu Dhabi this morning, and I reiterate Dan's point in terms of the changes in the Abu Dhabi market. I think, you know, even if we go back to kind of pre-COVID times and even emerging, there was availability and occupancies in Abu Dhabi. It was, even as a user or someone looking to go for a staycation in Abu Dhabi at the weekend, the rates were fairly low. occupancy is fairly low, and it was a fairly quiet destination. And we could see the change over the last number of years by the events Dan mentioned, UFC, even the growth in popularity of F1, through more fans coming to that sport and making the Abu Dhabi Grand Prix even bigger and better. And I think you can see it in the rates, you can see it in the occupancies, you can see it if you're looking to maybe stay overnight in Abu Dhabi. It is a huge success story. And I was watching the football over the weekend, and you could see it all over the screen on the Premier League. Visit Abu Dhabi, visit a certain brand of hotel in Abu Dhabi, and I suppose that's been piped into people's screens all over the world. If you look at football, Premier League is a global sport. People from all over the world are watching it, and Abu Dhabi, for instance, is a good case study. It's being beamed into people's homes, and the calendar of events is amazing. And I think, furthermore, if you look at Saudi, again, I came to the region in 2013. Saudi market we're studying it, I think could be 80-90% corporate market. The hotels in Riyadh at the weekends were very quiet. It was quite unusual for me coming from European markets. So you could see when they launched Riyadh Seasons, the different events, be it the boxing, be it the concerts, and how that's grown over the last number of years, where there's, difficult to get rooms at the weekend in Riyadh, and just really pushing the occupancy and the returns for owners, which is so important. So I think you've touched on a really good point. And we hope to get more international artists in, like Taylor Swift didn't visit us, so we hope that she might come.
Yeah, I saw the STR numbers for the UK, just the UK with it all, and it was crazy. Final sort of question for all of you to answer, and I'll leave you to decide who answers first. But what do you see as the most critical factors that make a hotel project successful, for full stop, in the region? And from both an operational but also a sort of investment standpoint.
So the region is quite development focused still in terms of investment and the way the capital is deployed for the hospitality asset class specifically. So it probably say that you need to understand which assets you need to develop, and understanding really the right positioning, not going always aboard and excessive in terms of size, in terms of positioning, and have the right product for the right market. So identifying that opportunity and sizing it properly would be a sort of critical success factor, as we do see a lot of products which did not necessarily follow those I'd say pieces of advice in the past. So that would be my 2 cents there.
I think the next point of, we started talking about, from a valuation perspective, we do these residual land values, we call them. So, the development costs of the project is vital from an investment perspective. Osama would find out and tell you exactly what to build and how big it should be, and what positioning it should be. And then when you do a valuation, you're going to be assessing those development costs as well. Now, in the region, development costs have been rising at extraordinarily high rates, driven by the sort of demand for raw materials, a few geopolitical issues as well, with the Russia-Ukraine crisis initially causing a surge in cost inflation. So we are seeing a general cost inflation rate of at least 5% in the region per annum, and even higher in the kingdom, obviously exacerbated by the demand for all of the raw materials of the giga projects. So genuinely, at the moment, the development costs and the values of a hotel are almost pretty similar, right? Per key, if you looked at it that way, actually the costs are very similar to what the actual capital value is per room at this stage. It's very much about maximizing that capital value, so your value exceeds your costs. But those costs are very important at the moment. So making sure that you've built the right hotel to make sure that your value exceeds your costs is vital. And that, of course, is going to help you produce a positive residual land value, a positive and strong IRR, and be able to actually look good from a performance perspective. Because the other thing with the residual land value is the costs come first. So we do the discounting of the cash flow. And so your value comes in later, after it's built. And of course, that value that's maybe relevant in 2 years' time gets discounted back to today, and that reduces its value. So you get this discounting effect on the gross development value, as we call it, which almost sort of reduces it down to below the level of the costs which come out today. So it's a real balancing act. And I would say having the right advice in terms of, what to build, and also having it properly costed by a genuinely reputable consultant. So many owners in this region, they go off and build their asset and they spend far, far too much money on it. Like Kasama just mentioned there, they overspec the asset. I've seen some fabulous mid-scale hotels here in the region, which are genuinely almost upscale in quality, but they're a lower quality brand, and it's just pointless. So having that kind of right costing and the right advice about what to actually build is, I would say, another big factor.
Yeah, for me, it's kind of more of a summary, I suppose. In real estate, the phrase is the day you buy is the day you sell. And I think, to touch on Sam's point, because the development cycle where we are in the market, I would say that Dubai market in particular is maturing now into, getting to a tipping point where there's more transaction keys per year. We're moving to that in some suburb markets in Dubai. A recent one I done some work in is there's more transaction in terms of keys than there is actually in terms of new pipeline delivered in the same year. So that's a kind of tipping point we're coming to. But to go back to my little catchphrase at the beginning, I'd say like the day you develop is the day you sell, because if you get the positioning maybe incorrect, or if you overrun on the costs, you have a disconnection between the costs that you have incurred as an owner versus the market value for the day you go and sell. So if you develop for, 120 million, including your land and your costs, and your positioning is based on that amount, and the market value is 100 million, then if you want to exit, you're going to have to take impairment. So that can lead to a difficult situation. That's not just in this market, but again, a lot of these properties in our markets are recently developed, be it in the last number of years or last 10 years or even last 20 years. So a lot of owners are holding onto those costs and won't dispose unless they can clear those hurdles. And I think in terms of general hotels, then you're looking at two things really. You're looking at strength of cash flow. And I think cash flow is so important, and that has historical cash flows showing the robustness of the business that's been through a number of cycles, that you can stand over it. And then secondly, that you can stand over cap rate as well. And I think when it comes to cap rates, one of some of the most important things that you're looking at is that positioning. Is it high end, or a bit more like kind of mid-scale or economy, and the location? Is it in a prime area, secondary area? And these are the kind of factors, cash flow and cap rates and discount rates, that are underpinning values. And I think they need to be looked at and studied very carefully to make sure owners get the results they want.
Well, perfect. And that just leaves me to say thank you to the Dream Team for joining and giving us a wonderful sort of overview of both the market and also how, we need to be looking at both the operational and the sort of investment side of the hotel, the hospitality markets. So thank you for joining me today, and I look forward to seeing you in a few days' time in Dubai. So thank you again.
Thanks, Pat.
Thank you, Matt.
Thank you, Matt.
Look forward to seeing you there.
Yeah, look forward to it. See you. Bye-bye.
Bye-bye.